Hi guys, Abhishek here from Engulfing Bull. Welcome back. Today I'm going to talk about FOMO, which is fear of missing out. And I'm also going to introduce you to a new term called FUD, F-U-D, which is fear, uncertainty, and doubt. Both are interrelatable and both are very important for you to understand. FUD is more of a cryptocurrency term. I think people who trade in cryptocurrency are more familiar with this term rather than stock traders. FOMO is a basic general term which defines your fear, which defines your hesitance, which defines your uh, unfaithful trading system. FOMO is basically if you don't follow your own system, your own trading strategy, but you actually follow the herd behavior, you follow external factors, you just because you are afraid that you might miss a big move or even a small move and you want to gain money out of it. All right, so let me be very clear. It is not possible to make money all the time. All right, all the moves might not be satisfied by your strategy and you might miss a couple, but that is okay. However, if you pay attention to the moves that are or the positions that are the opportunities that are created by your strategy, your system, that profit alone will be more than enough for your trading business. Instead of following other stuff that bothers your trading system, you should pay attention to the one that is already working. Okay, so basically, don't have FOMO, don't be afraid of missing a couple of opportunities, but be prepared for an opportunity that is according to your system. So what creates FOMO, right? How is this FOMO created? What are the factors that can relate, that can create FOMO, which will give you, certain bad trades? All right, the first one is news. All right, in my workspace, I don't have any television. All right, I have a system, I have my trading terminal. If my system tells me go take this position, I take it. Okay, but I do not follow news. I don't follow the stock market gurus who suggest stocks. I really believe tips is equal to spit, and there are reasons for it. I've gone through few things that made me believe such things, and I take a very strong stance on it. All right, so news is a big factor which affects your trading. So I suggest that stick to your technical analysis, stick to your system, and take good trades. The second factor is discussion or social banter. This is another reason I always tell everyone not to discuss their book. When I say not to discuss their book, that means if you have open positions, please do not discuss it with anyone else. If you are thinking of entering a position, please do not discuss it with anyone else. All right. If there are situations where you discuss your trades, where you discuss your opportunities with other people, and in this world, people don't shy away from giving their own opinion. So it's very easy for someone else to come and say something that is against your position, and then when the time comes that you are actually in front of a system to enter because your strategy tells you to, you get scared because someone has said something that is against that position. So if you want to buy and somebody has said, oh no, somebody is telling you that, oh no, I don't think it's a good buy, etc., because of various reasons that is not applicable to your system, that will create that fear and you will not be able to enter the position. All right, so avoid discussing or avoid social banter on your positions. Third is regret. Sometimes what happens, there is a for example, if you're trading gold, if you're trading a stock and it goes up, but it is not according to your system, there is no trading opportunity there, it just goes up, which can happen, right, on the basis of any particular fundamental news. That goes up and then the next day you're regretting about it. Oh, I should have entered because this, because in the news I heard, because my friend told me that this could happen. If you have that regret, if you have that feeling that every time you miss a trade you're going to cry about it, it's not going to work. So don't have regrets on a missed opportunity. Okay, because if you have a regret now, the next time a similar situation comes, you'll jump in, without thinking twice about it, and you will probably make a loss on it. All right. So please avoid regretting on missed opportunities. The fourth is the greed. All right. If my system gives me 2 trades a month, and I'm happy with it because I've made consistent profits throughout the year, and it is okay, then why do I be greedy and start following other things that will give me 4 trades a month, but it is just random strategy? You know what I'm trying to say? Does it make sense? Like, say for example, you have a system and it gives you a perfect trade, you earn like 10% a month or something like that. But the greed kicks in because now you believe that you can do anything. Now you go to a smaller timeline and you start doing small trades because you have that greed. You're not satisfied with it, which is not good. Believe me, if you want to achieve more in trading, you can increase your position within your system. You can increase you can probably increase the number of trades based on your system, but you cannot be greedy and go to a smaller timeline and start hunting for small trades. Okay, that is not good. That is just FOMO, because you feel that you're missing out on few things, but you're actually not missing out few things. You're filtering out a lot of things when you follow a system. Okay, so the fifth one is called the panic of missing. The panic of missing is basically when a panic is created by external factors. When I say external factors, obviously it comes from news, it comes from discussion, from social media, from brokers. So for example, if you're just sitting down, right? If you've got your trades planned, you've nothing, but somebody told you, your broker calls you and he says, "Sir, did you see this? There's a news here. Why don't you buy Maruti?" You open Maruti's chart. There's nothing there according to your own system. And you're like, okay, fine, I'll wait. The broker calls back 15 seconds later and says, "Did you see Maruti? It's gone up like 30 points. Sir, I think you should buy it. You should buy it." And with the fear of missing out on that particular piece of news that you don't even know about, you enter that position. You're like, "Oh, forget it, let's buy it. I don't want to miss this trade." And the next thing you see is that is the high of the day and the prices start falling. And you're scared because it's not according to your system. If it was according to your system and you have a proper risk management in place, you won't be scared. You'll be like, "Okay, I know my risk. Let it happen. We'll see what's what." All right. So it's very important to avoid this panic of missing as well. Plan your trades and trade your plan. All right. Very important. And the last one is, if you don't have a strategy, then all you're doing is trading on news, trading on opinions, trading on someone else's research, right? If I have a car and I hit it, right? I damage it myself, I will not be as disappointed as if someone else does it to my car, right? Please don't trade on anyone else's research or strategy. The keyword here is trade. Investment, another game. All right, please don't trade on anyone else's research. Do your own research, do your own homework, have your own strategy, and then execute your trades. Okay. All right. So the kind of trades that FOMO has is, this is a 60-minute chart. This is, I think, last week. This is Nifty last week, and you can see at a 2:15 p.m. the candle, it breaks out a resistance, right? But if you trade while it is breaking out, or even if now after the candle is ended without a follow through, the next thing you have is a false breakout, right? You've not done your homework properly. You're entering early, right? If you want to enter on a breakout, wait for a confirmation. You've not waited. There's a gap down. There's a retest of the resistance, and the prices fall. So all the FOMO traders who are buying there are losing money. All the professional traders, or let me not call professional traders, but all the traders who know how to look for a confirmation, when to look for a buying opportunity, they're making money by selling here. Okay, now look at this. This is a Bank Nifty chart from last week. There was a support here. The prices were consolidating in that range. You see, there are 2 points marked by the arrow. The first arrow, where there is a doji, you see how the prices were breaking out of the resistance. If anyone is trading because of FOMO, because fear of missing out, they're not waiting for the candle to finish. And if anyone is trading while it is breaking out, you will lose money because it creates a doji and there is a reversal. It's a false breakout. Okay, so always wait for a confirmation. Similarly, even in the last pointer, you can see the last candle there. It was a 2:15 p.m. candle as well. When the prices are breaking out of the support, right? If you don't wait for the closing of the candle, and if you trade while it is being made, right, that is a scary scene, because by the end of the candle, see how there's a wick, so the prices go back up and close above the support. That is the time you don't know what to do, because you don't know whether there is a confirmation that is coming up or it is just a false breakout. All right, so what we would do, you see, we were selling there where the arrow is. After a breakout, there is a retest of the support, which becomes a change in polarity. The support becomes a resistance, and then after the bearish engulfing pattern, you can enter there. That is 1,000 points in Bank Nifty in a couple of days, till that blue line here at the bottom, which is a support line. All right, so this is the trade. This is the kind of research, this is the kind of homework you should do, you should plan before you execute a trade. Okay, so this is another trade of FOMO that I'm going to talk about. This is Yes Bank chart, right? You see the prices fell down, and then from December till March it started going up. All right, everyone thought that this is it. It's a nice company, blue chip company. I don't want to miss out on this rally. I want to buy near the lows and stuff, and so everyone started buying here, right? Everyone started buying here. But anyone who's professional enough, anyone who's using technical analysis can understand this is not the right place to buy. Okay, so the next week it was a rejection candle, right? So if you see here, right, there is a support which was broken, and now it becomes a resistance. So anyone here who's buying on a FOMO trade is losing on big money, and anyone who's selling here, look at that, beautiful. The entire year fell. Okay, so it's very important to have a system. It's very important to follow what you're doing, and it's very important to understand what not to do as well. It is difficult, but it is not impossible. Okay, realize that it is, if your system doesn't give you a trade for the entire month, it's fair enough, don't do a trade. But if your system gives you a trade, take that trade. If your system doesn't give a trade, do not take that trade. Okay, how to tackle FOMO or FUD? Be consistent in following a strategy or a system. Have clarity on the timeline that you want to trade. All right, if you're trading on a weekly or daily time frame, you want to hold your trades for a couple of days, do that. If you want to trade on a 15-minute chart, be clear that yes, I want to trade on a 15-minute chart. I don't want to carry my positions to the next day, so I'm only going to use this time frame to trade. Don't have FOMO. Don't go to a 5-minute chart, or don't go to a daily chart. It doesn't matter to you, right? Once you realize that you've entered a trade based on FOMO and not according to your system, please get out of it as soon as possible. All right, don't let yourself just linger in the trade just because you've taken it and there's a profit coming or loss coming, whatever. If you realize it's not according to your system, get out of it. Building a good habit is more important than just getting a lucky trade in. Okay. Plan your trades and trade your plan, guys. Plan your trades of every time. You should know today that tomorrow you're going to take this trade if this is going to happen. All right. The last but not the least, manage your capital appropriately. It is very important for you to manage your capital properly. All right. Have a proper risk management system in place, and you will never enter an extra FOMO trade. All right. So if you like this video, please subscribe, like, and share it with your friends. And I'll see you soon. Thank you very much.